Today, we're zeroing in on some pretty interesting moves in the investment world, specifically Berkshire Hathaway's latest portfolio tweaks.
Exactly. We've got the 13F HR filing from the SEC. It gives us a detailed snapshot of their public holdings right up to March 31st, 2025.
Yeah, it's like getting a peek behind the curtain, isn't it?
It really is. You get to see the playbook of, one of the most watched investors out there.
And our goal today is really to cut through the noise. We want to figure out Berkshire's main strategies right now. Where did they really boost their stakes, and where did they pull back since the end of last year? Okay, so let's start with the sort of the big picture. Looking back over the last year, Berkshire's total portfolio value. It's moved around a bit.
Yeah, it has. What are the numbers?
So it was roughly $280 billion back in Q2 2024. Then it dipped a little to around $266.4 billion in Q3.
Okay.
Climbed back slightly, $267.2 billion at the end of 2024. But then the first quarter of 2025, it dropped more noticeably, down to about $258.7 billion.
So definitely a downward trend these last couple of quarters.
Yeah. What do you think might be going on there? Any initial thoughts?
Well, that overall drop is interesting. Could be just, broader market stuff pulling things down.
Sure.
Or maybe it's strategic. Perhaps Berkshire decided to hold more cash, which wouldn't show up in this filing since it's focused on stocks.
Good point.
Or simply some of their biggest holdings just lost value during that period.
What really stands out when you look at their biggest bets now?
Well, the concentration is still pretty remarkable, isn't it?
Oh, absolutely.
The top 7 holdings, they still make up something like 80% of the whole portfolio value.
80%. And those giants, as of March 31st, 2025, Apple's still way out in front, $66.64 billion.
Then you got American Express, about $40.8 billion. Coca-Cola, $28.65 billion. Bank of America, $26.36 billion.
Okay.
And then the next group, Chevron at $19.84 billion, Occidental Petroleum at $13.08 billion, and Moody's, $11.49 billion.
So mostly the same familiar names at the very top.
Largely, yeah.
But you mentioned Bank of America. Its value seems a bit lower in that list compared to maybe previous rankings. Did the share count change?
Good catch. Yes, it did. They did trim their Bank of America stock.
All right.
They went from, let's see, around 680 million shares at the end of 2024 down to roughly 631.5 million by the end of March.
So that's about a, 7% reduction?
Yeah, exactly. A 7% cut in their holding there.
Interesting. Okay, let's maybe dig into that more. What other significant reductions did we see? It's always revealing when a big player like Berkshire lightens up on something.
Agreed. So beyond a Bank of America, there's some other trimming. Capital One, they reduced that by about 4%.
Finally trim.
T-Mobile saw an 11% reduction. And then Liberty Media. That was a big one, a 48% cut in their holding.
Wow, 48%. Almost half their stake in Liberty Media.
Yeah.
Any thoughts on why such a big move there? That seems quite drastic.
It does, doesn't it? Hard to say for sure. It could be a rethink of the whole media sector or maybe something specific about Liberty's assets or strategy.
Right.
But yeah, a cut that big suggests they really wanted to reduce their exposure there for whatever reason.
And then there were the complete exits, right?
That's right. 2 complete sell-offs. They got out of Citigroup entirely.
Okay.
They had, over 14.6 million shares, now 0. And also New Holdings, the digital bank.
Nice.
Over 40 million shares held previously, also down to 0. Just gone. A clean break from both.
A total exit. So looking at that group, Bank of America, Capital One, T-Mobile, Liberty Media, and then the complete exits from Citi and New Holdings, can we draw any lines between them? Any common themes maybe?
That's the million-dollar question, isn't it? It's
Yeah.
a real mix. You've got traditional finance, BOE and Citi.
Yep.
Consumer credit with Capital One. Telecoms with T-Mobile. Media, Liberty. And then New Holdings, which is more fintech, focused on Latin America. So yeah, maybe not one single theme, but perhaps a bit more caution on parts of finance and media seems like one possible interpretation.
That makes sense. A useful way to think about it. Okay, so they've been selling or trimming in those areas. Let's flip the coin. Where did Berkshire increase its stakes? The additions. This is where we might see, where they're putting fresh money to work.
Exactly. The buys often signal where they see opportunity or feel confident.
And the biggest jump, percentage-wise, was Pool Court.
That's right. A huge 145% increase in their holding.
Wow.
Yeah, they went from just under 600,000 shares to over 1.46 million. big move.
And Constellation Brands also saw a massive increase?
It did. 114%. They more than doubled their stake there, ending up with over 12 million shares.
Okay, pool supplies and Constellation Brands beverages, they seem quite different. What's the potential thinking behind such big increases in these two?
That's a great question. Pool Corp, well, it's a major distributor for swimming pool stuff.
Yeah.
Maybe they see it benefiting from, like, ongoing trends in home improvement, outdoor living.
Could be. People spending more on their homes.
Exactly. That big increase could show real confidence in consumer spending in that specific niche. Constellation Brands, with its beers and wines, that also taps into consumer spending, but maybe more the discretionary kind.
Right, drinks.
So the big jump there could suggest they believe in the strength of those particular brands, Corona, Modelo, etc., or just the resilience of people wanting those products.
Okay. And we also saw some increases, maybe more moderate, but still significant, in Domino's Pizza and Heiko Corp.
Yep, Domino's was up 10%. And Heiko Corp, that's an aerospace and electronics company, they increased that by 11%.
So what do those suggest? Domino's fits the consumer theme again, maybe?
I think so. Adding to Domino's could signal a positive view on the, quick service restaurant business. People keep ordering pizza.
Fair enough.
Heiko, though, that's different. Aerospace and defense. That addition could mean they're feeling confident about the long-term prospects there. Maybe more air travel coming back or defense spending, something like that.
So consumer stuff, but also aerospace.
Yeah, so while there's definitely a lean towards consumer businesses in the buys, adding Heiko does add a bit of diversification into a different industrial sector.
Okay, so let's try and pull this all together. We see some trimming, particularly in certain financial names, complete exits from Citigroup and New Holdings, a big cut in a media player, and then these really substantial increases in companies linked to, what, home improvement, beverages, pizza, and aerospace.